If you're sick and tired of your really good trades all of a sudden turning around on you and liquidating you, this is the video that's going to explain to you why that happens and how you can protect yourself in future. No more failed trades, no more confusion, and no more giving up. If you're here, it's because you are serious about leveling up your trading game, and that is exactly what I'm here to help you with. So hello to you if you are new here. I'm Annie and this is 𝗧𝗿𝗃𝗵𝗹, and my goal here is to help you actually master trading. So if that's something that's of interest to you, and I bet it is because that's why you're here, then be sure to hit that like button and hit subscribe if you're not already subscribed so that you can be notified every time I upload a new video. In addition to all of that, this is one of those videos that you are going to want to save, because whilst I'm going to talk specifically about the price action that happened with Bitcoin last night, what did happen happens very often. And this is going to be a video that you're going to want to refer to often to make sure that in future you do not become a victim of liquidation hunts. So last night, Bitcoin had a massive flush out and the warning signs were there, providing you knew what to look for. Today, we're breaking down funding rates, what they are, why they matter, and how they played a key role in what happened overnight. By the end of this video, you're not only going to understand funding rates, but you're also going to understand how to use them as a tool in your arsenal. So let's get into it. So funding rates are the last piece of the puzzle when you're doing your analysis. So they're not unimportant. They're definitely very important. However, they're more like the cherry on top. They're not the whole cake. When the funding rates go crazy, like they did last night, as you can see right through here, this is a warning sign that something big might be coming soon. If you've ever been caught off guard by a massive market move, it's likely that you missed out on this key piece of information. But before we dive deeper, let's take a look at what funding rates actually are, because if you're new to trading or specifically perpetual contracts, you may not have heard of this before. Funding rates are fees charged by exchanges in order for you to be able to participate in the market. Think of them as the cost of doing business, and these fees are charged on perpetual contracts, and perpetual contracts are contracts that do not expire. On most exchanges, the fee gets charged every 8 hours, and on the particular exchange that you choose to trade on, you will be able to monitor when the next funding rate is going to be charged on any of your open trades. Besides the funding rate being a cost of doing business, it also helps to keep the price of perpetual contracts in line with the spot price of the asset that you're trading. When the funding rate is positive, the longs are paying the shorts, and when it's negative, it's the other way, the shorts are paying the longs. When the funding rates are high, that's a signal to us that there's probably a strong trend and there's a lot of participation in the market, particularly from people wanting to use leverage, and that's what can cause the imbalance between the spot price and the perpetual contract price. In this video, I will be showing you exactly how to monitor funding rates, so be sure to stay with me to the end. And of course, if you're getting value from this video, don't forget to hit that like button. Also, leaving comments down below helps to let me know, as well as YouTube, that you are enjoying this content. So let me walk you through exactly what you need to monitor daily to make sure that you don't become a victim of future leverage flashouts. For my personal trading, this is the exact order in which I follow when I'm doing my daily charting process. The first thing is my trading strategy, which involves the pattern, the timing, and the levels. I need to always know where we are in the cycle and whether or not we're coming up to being due for some sort of a reversal. That is always number one above everything else, and whatever your trading strategy is, that should be number one to you as well. Now, this is my personal trading strategy right here. This is the formation that I follow, and it's what I teach on this channel. Again, if you're wanting to learn this, be sure to hit that subscribe button. And you also might want to consider getting yourself a TTC membership where you can get access to all of our courses that explain this in full and gives you a lot of details on how to trade this method so that you can trade it like an expert. Now, I'm not going to go through this strategy in detail right now because that's not the purpose of this video. If you're in the TTC community already, or you've been watching this channel for a while, you will already know the basics of this formation. If you're brand new here, I will link a video up here that you can watch that does explain this formation in detail to you. The second thing that I monitor daily is liquidation data. So what I'm looking for is the liquidation levels of all the current open positions in the market. If I can identify high levels of liquidations in one particular zone that happen to match up with my levels, then that zone is going to act as a target to me and also where I would start to look for pivot. Now, you can get this data from many different websites. I personally use 𝗖𝗵𝗃, and if you're interested in exploring 𝗖𝗵𝗃's features, there is a link to 𝗖𝗵𝗃 in the description down below. In addition to 𝗖𝗵𝗃, I also use another piece of software called Trading Light, and Trading Light differs in the way that it's showing me where the limit orders are. So these are orders that are not yet filled, but it's showing me where there is interest should price either head down lower, interest for buy orders, or if price were to head higher, interest for short orders. Following that, the next thing that I'm looking at is the open interest. Now, the open interest is an indicator that you can get on TradingView. If you just go up here to indicators and type in open interest, you'll actually find one that we've developed called Open Interest Auto Override. So if you look for that one and add it to your chart, it's going to look like this. The reason that we created our own is because we know that the highest volume comes from Binance, but people trade on many different exchanges, and therefore they may not always be charting the Binance chart. So this open interest always overrides whatever chart you're on to show you the open interest on the Binance exchange. And that's what you want to be paying attention to. Now, the reason why we want to be paying attention to open interest is because it gives you an indication of how much participation there is in the market. It's showing you the total amount of contracts that are currently open and have not yet been closed or settled. A high open interest indicates significant market activity and strong participation. The more the open interest rises, the more it's signaling to you that more traders are coming into the market, and that often increases liquidity. However, low open interest shows you that there's lower market participation and there may be uncertainty, people sitting on their hands, not really willing to commit at this point in time. So when we see the open interest rising, we can draw the conclusion that there are probably high levels of leverage positions being opened in the market, and the longer that goes on for, the more at risk we become of getting a liquidation wipeout. This especially happens when there is a significant increase in the open interest, heavily weighted to just one side. For example, if there was a lot more long positions being opened in a strong bullish market, or a lot more short positions being opened in a strong bearish market, either of those two scenarios could lead to some sort of a squeeze when the market decides to move against those positions. So once we've checked all of these things, the final piece of data that you need is the funding rates. And the funding rates can help to add confluence to your existing technical analysis. So think of it this way. Funding rates are very important for you to consider, especially in a highly volatile directional market. However, they are not the standalone thing that you should be making a trading decision from. So let's break down why and when funding rates will lead to a sharp reversal. So using this move that happened on Bitcoin just recently, we can see that we had a breakout here that came with high volume. And from there, we got a flush out of about 15% on Bitcoin. At the same time that you can see this move happening, you can also see the open interest down here significantly rising. This signals to us that there was an increasing demand in leverage in the market. At the time that this was happening, the funding rates across all exchanges and also altcoins as well as Bitcoin really started to peak and get significantly high. As I mentioned to you, when this happens, it tends to cause an imbalance in the price between the asset on perpetual contracts and its spot price. So in order to try and rebalance that, they increase the funding rates, hoping that people will close their leverage positions in order to rebalance difference between the perpetual and the spot price. And failing that, they have to issue a liquidation hunt, and that will reset the market. And that's exactly what we saw last night. We saw that the extremely high funding rates was signaling something is about to happen, and boom, it eventually happened. Let me explain this in more detail using the pattern, the levels, and the timing. So using this entire week as an example, starting from the weekend, this right here was the weekend trap, and this here, this little spike up was the false move week beginning. That turns into a one-day trend that finishes off the false move. So we have a false move in one direction, then we'll get usually a one-day trend in the opposite direction. That one-day trend can change usually at any any of the session changeovers, and it will happen either on a Monday or a Tuesday. So you're looking for 3 small spikes in one direction to let you know that it's over, and then somewhere around the session changeover, which you can see right here, you'll get some sort of a reversal pattern. There are many different reversal patterns that you need to learn in order to be able to identify them. In this case, it was a V bottom reversal. Once you get that reversal, it takes you into your 3 level or 3-day move to the upside. We had 1 level through here, the 2nd level through here, and the 3rd level through here, which caused the final trap. This is another reversal signal that happened, which is called, in this method, a trapping volume formation. And when you identify that formation, you will know that a reversal is coming. When I actually saw this forming, I signaled to our private community to be aware. And you can see that in this post here where I said, Bitcoin giving trapping volume formation vibes, not saying you should short it, but if you're long, you might want to tighten your stops or consider taking profit on short-term trades. And I recommended putting your stop loss under the blue vector wick. This was the chart at the time, so you can see well in advance of any move happening. Because I understand the pattern, the levels, and the timing, I was able to know that we should start protecting our long positions or consider taking profit because a reversal was likely. Now, that was in combination with everything that I've showed you in this video. Following that, you can see we got our liquidation move. Now, I've kept all of these lines on this chart to show you where the liquidity was at the time. All of this has been wiped out now, but if you zoom into this area, you can see here that there was an extreme amount of money that was committed on this breakout right here, and therefore a fast move down wiped out hundreds of millions of dollars worth of liquidity for all the late longs, the people who went long far too late in the trend. And this here just proves that this fast move right down here did cause that extreme amount of liquidations. At the same time, funding rates were absolutely peaking, and funding rates across most of the major exchanges is something that you can monitor yourself on a website called coinglass.com/funding rate. In addition to that, if you want to see the funding rates on the particular exchange that you can use, most of them show it in the same place. So when you're in a perpetual contract, you will look across the top here and you'll see here a funding rate countdown. It's showing you the funding rate on one side, and on the other side, it's got the countdown timer. That timer is letting you know how long until the next funding rate gets charged. If you remember from the start of this video, I mentioned to you that the funding rate gets charged every 8 hours. So at the time of filming this video, there is 5.5 hours before the next funding rate will be charged. This is the Bitfinex exchange, but Bitget exchange also very similar, where you can see if you're in a perpetual contract, you will see the funding rate and the countdown as well. Now I'm showing you this on these 2 exchanges because these are the 2 exchanges that I personally trade on the most. If you happen to be looking for an exchange to trade on yourself, you will find the link to both of these exchanges in the description down below. And if you use those links to create your account, you will get between a 20 to 25% trading fee rebate on all of your trades for life. And if you've been watching this video so far and you now understand that every 8 hours you are going to be paying the price for all of your open positions, you will also start to understand how important it is to be signing up to exchanges through links that give you that best rebate possible. Not only that, but when you do use any of the links listed down below to sign up to an exchange, you will also get free access to our Discord, and the instructions on how to get that access are also listed in the description of this video. So if you're wanting to just get a general idea of how funding rates are looking each day, you can go to coinglass.com/funding rate, and that's going to bring you to this page that you're seeing right here. Now, what I want you to focus on is the current tab right here. So don't worry about 1 day, 7 day, 30 day, or 1 year. The information that I'm giving you in this video is relevant to the current tab. The funding rates here will change if you click on different tabs. Now, your next step is to understand what these numbers mean. Focus on the Binance exchange first. Like I said to you, that's where most of the volume comes from. So we want to assess this exchange first, and once you've done it, you can then get an overall look at all the other exchanges as well. Now, what you're looking at is this number right here. A funding rate in the region of negative 0.01 to positive 0.01 is considered normal. If you see the funding rate rise to somewhere between 0.02 to 0.03 in a bull market, or negative 0.02 to negative 0.03 in a bear market, or I should say bullish trend, bearish trend, then this is a little bit of a warning to you. If you were to see funding rates like that and you were in really good open positions, that might send a signal to you that maybe you should move your stop losses to protect a little bit more of your profit, as the market may start to get overheated soon. It doesn't mean massive warning just yet, but it means start to be careful and manage your trades well. Now, the warning signals come in when you start to see funding rates above 0.0375 in a bullish trend and below negative 0.0375 in a bearish trend. That is warning something big's going to happen soon. Again, either take profit, sit out, you don't want to be part of it, or move your stop loss up very, very tight. And that comes back to the warning that I gave in Discord on this particular trade, where I said, consider putting your stop loss under this blue vector right here. For people who were in a long position, that was the tightest spot that they could put their stop loss while still giving the trade room for me to be wrong and it continue up in a bullish trend. So in this case, once the price did drop heavily, our community stop losses were right here, and they were able to exit their trades still in profit and not be part of any of this damage right here. Now, when the funding rates stay elevated above the 0.01% in a bull trend for long periods of time, that means that long positions are paying a hefty fee to the short positions for the privilege of being able to participate in the market. If that stays overheated for too long, that's when we would expect a liquidation wipeout. Now, in the last week before this actually happened, we were seeing overheated funding rates actually probably over the last 2 weeks. So it really was a drawn out period of time, and that's why we had such a strong move down. Funding rates, however, do not only reset with a liquidation hunt, and this is a really big misconception. Funding rates can also reset in periods of low market volatility, and it might be that there is uncertainty in the market. The price has been consolidating for way too long, and people who are in good positions start to feel like there may be a reversal soon and they don't want to give up their unrealized profits. So they start to close their trades. Now, if people who are currently in a profitable trade start to close and take those profits, that's going to also slowly reset the market over time, and that will help to rebalance those funding rates. So in a situation like that, we wouldn't need to go to the extremes of a liquidation hunt, and the market might naturally reset itself, bringing the perpetual contract price back closer to the spot price, and therefore everything just naturally gets reset and we can start to just trade normal price action again. Another thing to know about funding rates is they can also signal to you market sentiment. For example, if we go back to CoinGlass, you'll see here that after this liquidation wipeout that we had yesterday, the Bitcoin funding rate is back to about 0.016. So it's kind of in the okay region, still a little bit high, but it's not ridiculously high. It's closer to that 0.01 that we like to see. But if you make your way down this list and you have a look at the altcoins, some of them are still highly elevated. Look at Pepe, for example, that is at 0.06. We've got 𝗟𝗶𝗃 still at 0.0372. And even looking here at Litecoin, Link, and AVAX, even WLD, these are all in the 0.03 range. So what's the conclusion that you would draw from this? What this tells us is that market participants, even with these high funding rates, are still happy to participate in altcoins, but with Bitcoin we have reset. So that could signal to you that market participants believe that it's alt season. And so when we get a big leverage flush out, they're more interested in getting back involved in altcoins sooner than Bitcoin. But as always, don't use funding rates alone to draw that conclusion. Always do your TA and then see if the funding rates help to confirm your analysis. So remember, funding rates are a tool and they're a very important tool, but they're not the holy grail. The best way for you to prepare to trade is to make sure that you have a very strong trading strategy. And in my case, I trade the TBD system. Then I combine that with the liquidity, the open interest, and as a final level of confluence, the funding rates. And if you don't want to miss these warning signals next time, be sure to stick around because that is exactly what we cover on this channel every week. So if you haven't subscribed yet, be sure to do that. Hit the like button if you got value from this video, and also leave a comment down below and just let me know, did this catch you off guard, or were you completely free of it but still gain some value from this video anyway? Thanks for watching, and remember, the markets are tough, but so are you. See you on the next video.